Hey, welcome back. I'm Jason Jarvie with Realty ONE Group, and I work here in the Phoenix metro area. We're going to get back into the stats today. We've got more DIY projects coming, and I'm going to be showing you all sorts of stuff around the house. But I think it's just as important to know what's happening around you as to what's happening inside your home. So let's jump into some of that data. Let's look at a little bit of what's happening with Offerpad. Offerpad is one of the large iBuyers in our marketplace, and they had a pretty large percentage of the active inventory not too long ago. Looking way back into 2022, way back, I know. Mid-year, they were over 400 homes active with only about 50 under contract. That is a horrible contract ratio.
Ouch, that's rough.
And we talk about contract ratios here often because the number of homes active versus the number of homes under contract are a good indicator of what's to come. Looking at the graph here, you see that right up at the top, they were not in a good position, which is why they focused really heavily on selling the next 6 months into this year, where you can see right here around February, March, they started to come into a little bit more of a balance for them at least, because they basically stopped buying homes and only focused on the selling. They've dropped their inventory nearly 97%, with a current ratio of 36/13. So 36 under contract versus 13 active. That's really good for them. But it's not done so well for the company as a whole, with their stock declining almost 87% from $5 down to 50 cents today.
Hey, that's not good. That's not good.
I'm sure it feels great to have gotten all that inventory out from behind them. It's going to be important to watch to see what they do here in the near future if they pick up buying again, because they were actually pushing them and a number of the other iBuyers prices in a negative fashion for our marketplace. Sure, it was good for sellers, but it wasn't a good thing for buyers. So as usual, let's start by looking at what sellers are doing, because ultimately sellers do have the ability to lead the market. Without sellers, buyers have nothing to buy, prices go up. With too many sellers, buyers have choices, prices go down. So what are sellers doing? Well, we're looking at new listings here. New listings are a great leading indicator of what the selling mindset is and what's happening amongst our homeownership population. What we're seeing here is 2020, 2021, and 2022, January through May. When we add in 2023, this is where we see that divergence line, and all year long, there have been fewer and fewer and fewer homes coming on the market, which has led to a bit more problems in the active inventory. And our active inventory, every single time we've talked about this, it's been going down. You can see our peak here at the beginning of the year versus our peak last year at 19,644, which, by the way, is not enough homes for a metropolis of 5 to 6 million people. We should see 25,000, 30,000 homes to even come close to balance. If we were in the 20 to 25 range, things would be looking a little more on the positive side. But right now, we're sitting at 11,374. This pink line showing all of what's happened this year. See that funny one, brown one there? That's COVID or the cerveza sickness. So that one doesn't really count. 2022, we're coming off of the crazy high of everything that has happened in the last few years. So this is kind of odd. It's really interesting to see that sellers are not interested in coming into the market. There's a lot of reasons for that. And one of them you can tell is interest rates. Interest rates are a super sensitive topic. And if you locked in, like I'm locked in on this house at 2.875, I don't really want to go anywhere for 6.5 or 6.75 or whatever it's going to run me now. That's a huge lateral move. And if I don't have to move, I'm not gonna. I imagine the sentiment is very similar among many homeowners, and that's totally being reflected right now in our total sales count, or the volume of how many homes are exchanging hands right now. So looking at price changes, that's an indicator of what any specific market is doing, because if a home doesn't sell, the first place to go is the price. Ultimately, the buyer decides what the home sells for, but the seller's gonna have to find that middle ground where somebody wants to offer. And we had a peak price change number here in October with 4,427 listings with a price change, all the way down to where we are now at 1,409 as of April 30th. That's a huge change. And you can see here back in 2022, barely anything was happening with a price change. So are sellers feeling a little more optimistic? I think so. When we look at the percent of sales with closing costs, that has dropped as well, and we're starting to come down into what would be considered more of a normal range, just below 35 to 40% of sales closing with a concession of some sort. That makes sense in this market. It's what we saw more as an average over time. And a concession could be any number of things. That could be closing costs on the loan, that could be HOA payments, that could be repairs done to the house, something that the seller is giving to the buyer in lieu of a price change or a price reduction on that purchase. So sellers are feeling optimistic. Well, one way to see if that optimism is even real is to look at the price. So monthly average sales price per square foot is a great way to look at that. And like we've talked about in the past, we peaked back in May of last year, and it has continued to rise this year. Not nearly at as fast of a pace, which was more like a rocket taking off in 2021 and 22, but certainly in quite the hockey stick change moving back up, which definitely shows that sellers are feeling that things are improving. There are fewer homes and there are still buyers in the marketplace, which tends to lead to prices going up. Even with the inflation surrounding us everywhere, all the new mortgage rules, all the old mortgage rules, and everything that's happening. So sellers are feeling optimistic, buyers are still in the market. Do you feel optimistic about the market? What do you think is going to happen? Are we going to have that big crash? Put that down in the comments. Let me know. What's your data source? Why do you think we are or we aren't going to? What are you seeing happening at the national, international, global, whatever it is that you think? Let me know. I'm always curious what you guys think. And when I look at those comments, I research them, and it helps me to learn too. So if you've gotten any value out of this and you've learned a little something, hit me up with that like button. It really does help the algorithm. I really don't know why, and I've told you this before, but I'm told it helps, so please, thumbs for me. If you don't like it, hit it twice. You know, stuff happens. But if you don't like the video, let me know in the comments what I can do to improve. A commenter last week asked for some different data on condos and townhomes in different price ranges, but didn't specify where they were looking. Heather, if you were watching, let me know. I'd love to put that data out for you. I'll do a whole video just on whatever market you are looking for. And if somebody else out there is looking for specific data, reach out. I love to share this, and I'm always willing to educate as much as you're looking to learn. So talking about buyers, we have focused on the listings under contract, which is a good measure for what's happening in our market. Are buyers absorbing the homes, which leads into the contract ratio? And just like it has been all year long, the number of buyers is certainly less than it has been in years past, but it's been rising pretty steadily. You can see we had this plateau point here where interest rates were really wacky. And then since week 13, we've seen this pretty decent rise, and we've crested. We'll have to wait and see to see if this continues dropping down for the annual percentage, much like the years prior, or if maybe we're going to flatline here as inventory continues to go down and buyers are still in the market. We might see that there's a bit more drive towards that demand side.
I want a home again.
So looking at what buyers have been doing over the years past, we see that in 2023, we're at 83.3. When we look at 2020, it doesn't really count because we were coming off of the cerveza sickness. So 102 was pretty high. When we drop back and we look at 2019, that's where we really start to see what's happening. 21, 22, they really didn't count. 20 didn't count. So we were just a bit lower than we are now at 77.9, in 2018 at 77, and then way back in 2017, you can see we were sitting at 69.9, which is a bit lower, not significantly, but it does show that the buyers are jumping into the market. They're absorbing the inventory that's coming in compared to the inventory that is sticking around with our active listings. So with buyers feeling optimistic, sellers feeling optimistic, pricing going up, how many of the homes are selling over list price? Well, you can see that we're starting to come into a bit more of a normal range, sitting right now at 19% of sales over list price. And by normal, I mean when you look back over time, you can see that we have this range of 15 to 20%. And that's normal because in any market, you're going to have what's called a cream puff. That's a house that just hits all the marks. And when it does, there are buyers looking for that. Whether they're investors, homeowners, or anything else, the cream puffs are the ones that sell quickly for a reason. Somebody's gone through the house, the seller has listened to the agent, or maybe they had an interior designer, maybe they were their own interior designer. Whatever the case, those cream puffs, those are the ones that we usually see here in a normal market. Not this market here in 21 and 22. Pretend it's on a cemetery and it still sells for more than list price. That was the stuff happening then, not now. So that's a good sign to see some of that balance coming into the market. Not a great sign as a buyer, but as a seller, it tells you that if you do it right, you price it right, you build it right, you're going to get the demand and it's going to come back into play. You can see closing over list price by price range here in the last 30 days. A lot of these closings over list price are in the slightly cheaper categories. I say slightly because $200,000 is still a ton of money, and 200 to 250, we're seeing 27% of those selling, or here, 27.7% selling for over list price. It's dropping off as the price goes up until you get up into that stratospheric range. But ultimately what we're looking at here is homes are selling with multiple offers and or over list price again. So what about the speedometer? That's the gauge that we're looking at to see how fast are we going. Our Cromford Market Index, we have 20 in brown, 22 in kind of this puke yellow color, and then we have 21 in blue. And you can see that last year things fell off of a cliff all the way down to that buyer's market here in weeks 48 and 49. But here in 2023, we've done nothing but improve. And in the last few weeks, we've been improving even more. You can see 137, 139, 142, 146, 150. It's climbing pretty quickly, already intersecting with 2020 after we almost hit the bottom in 2020. And you can see we're above 2019's numbers and just below where the market was in 2018. What we need to continue to watch for is this leading indicator. This number is a leading indicator of where our market is going to go. Because when it started coming down here in 2022, this was before pricing peaked in March and April. Pricing actually peaked out here in May. But the index was telling us that something was happening, that it was coming down. So if we see this index starting to change, let me pull some of these other ones back off. If we see the pink line going down, we know what's coming in the next 2 to 3 months. And we look at our speedometer, you can see that we're well into the green range here for our market. Now this index here shows the entire market at 152.7 when you average them all together. But when you break it down and you look at individual markets, for example, Tullison here, you can see is at 227.3 in the market. Demand is well above that balance of 100 at 111 and supply down at 48.8. Not a lot of new construction there. This is in an area where there's a lot of improvement as far as job centers and economic growth. So I'd imagine that that demand is coming from that region. You look at Anthem, we have a very similar situation. The difference is the demand is not near as high. Supply is significantly lower though, which is driving that number. If you were to look out in the West Valley, say Surprise, things are a little bit different. Our supply out in Surprise is quite a bit higher. We have a ton of new construction, and I've been showing clients out there, and man, they've got some great deals going on. We were looking at one site, and they were offering 3.75 interest rate if you use their lender. Now, it makes sense if you're using their lender, but oh my goodness, 3.75, another one at 4.25, and the one at 3.75, they were even willing to negotiate on price. These are great things if you're looking for a new construction. There are sites all over the place and lots of different variables to take into account here. So, like I've said in the past, if you have a question about the Phoenix market, if you want to see one of these cities in particular, or you want me to do a deep dive, I'm trying to do at least one deep dive a month, but should somebody reach out and say, hey, what about this area? I'm going to jump on it for you and I'll make sure to get it done. Thanks for watching. Again, if you're not a subscriber, hit me up, like, subscribe, do all those things. Watch one of the other videos or DIY content here on the video. we look forward to seeing you next time.